Hi traders, it's getting very lively out there in the financial markets at the moment. And these are risks, obviously, that traders need to manage according to their risk strategy, but certainly people need to be dynamic to the price action we've been seeing. Now, a lot of the moves that we saw on Friday in the US are spilling over into some fairly pronounced moves playing through in Asia, and it's got very lively indeed, and to the point where people are asking a lot of questions around the US economy, about the global economy, the Japanese economy more broadly, and asking what will the response now be from central banks. We're pricing the scenario where we're expecting emergency rate cuts to play through, a much more urgent setting, and if central banks don't share that vision in their upcoming speeches and their rhetoric, then we're going to take our pound of flesh. We're going to tighten financial conditions further. So people are going after central banks here and expecting or wanting that response. Now, of course, in that situation, we're not going to get the answers that the market wants so overnight, and it may take some time. And of course, that lack of visibility is seeing buyers pull from the market, they're at least taking them down to lower levels, and the selling activity that's taking place is meaning that all these order book dynamics are just moving markets sharply to the downside. We're seeing a lot of hedging activity playing through. People are moving out of cyclical areas of the market, the high beta areas of the market, the small caps, those economic sensitive areas of the market. They're going into treasuries, into bonds, they're going into areas of the equity market which has got much more predictable and safe cash flows going forward, like staples, for example. And I feel like there's much more to go. That repositioning still has a flush out to go. We can see that high yield credit spreads are widening sharply. They need to be managed and observed going forward. People are looking at a 2-10 yield curve, and that potentially could go into out of uninversion for the first time in a couple of years. If you have a look at what we've been seeing in US swaps pricing at the moment, you can see that journey front and centre. We've now nearly got 50 basis points of cuts being priced into the Fed meeting in September, another 50 basis points of cuts being priced for the November meeting, and potentially another 25 basis points of cuts for the December meeting. Now, of course, if central bankers don't share that vision, then we take our pound of flesh. If we have a look at what we've been seeing in Asia today, you can see the Nikkei getting really close attention. Japanese banks are getting taken to the cleaners. Earlier today, we did see the Topix financial sector, the bank sector, down nearly 12%. We went into a circuit breaker because the rate of change in the Topix was so pronounced. And of course, you've seen 10-year JGBs falling 12 basis points, which is the biggest move actually since 2003. We can see the Nikkei down 20% from that recent fall, but a lot of focus on what's happening in the Japanese yen. It was only recently that we saw dollar yen trading at 162. We're now at 145. That yen-funded carry trade is getting absolutely unwound in such ferocity that it's just causing wild gyrations. And of course, we are watching Japan very closely. Dollar yen 145, MEX yen at the moment is in free fall. There's just no one buying this at the moment, and it's just going down. Rallies to be sold very aggressively in that situation. If we have a look at the ASX, we were pushing 3%, and I think earlier on there was only 3 stocks which were actually higher on the day. So a blanket sell-off playing through. We can see that China's actually outperforming. They're seeing slightly better days in Hong Kong and Chinese equities, but small sellers playing through there as well. Now, if you go into the crypto scene, which I think is another one that's seeing very pronounced movement today, we can see Bitcoin down about 8%, Ethereum's down 16% as I speak. We're seeing no buying of gold. Really, the net change is slightly lower on the day, and I think that's largely down to the fact that we're seeing this big deleveraging and de-risking playing through, and gold's got caught up in that malaise. Now, I wouldn't be surprised if we did see a few buyers playing through in gold, because when the concern is around a potential recession and needing a response, gold is obviously a good hedge against that. And of course, we've also got geopolitical headlines, which are really sort of continue to play out. And I think gold is a good hedge against that. So I wouldn't be surprised if we did see a few buyers playing through in gold. But we're also seeing NASDAQ futures down just over 2% at the moment. So that's shaping up for more pain coming through in European and US traders as well. And we are seeing VIX futures pushing up 2.5-fold. So again, that high volatility just resonates with people taking equity out of the system as well. So a lot of questions being asked around the US economy. Are we going into recession? How do we price risk around that? And we get that lack of visibility. People look to deleverage playing into that situation. So a lot of questions being asked, and I think there's more to come in terms of this volatility here.